John, did you want to take it away?
Yep, I'll take it. Welcome, everyone. So, as Claude and I were just discussing, we discovered this is actually our last live webinar for the for this year and for the next fiscal year. We uploaded, as you know, we've been busy giving our webinar since April. We had a bunch of pre-records to make up for our budgetary delays. And because knowing January, February, March is really busy for everyone, we figured we upload and push out as many as we can. And now this is our last live one. December 5th, you're going to get a presentation by Jason Kella on the infrastructure and housing. We just pre-recorded that this morning, and it is excellent. It's an excellent presentation, which you should all make sure you follow. And it sort of goes into what the First Nation infrastructure is and how it's working with the community. So. And we, as Claude mentioned, he'll send a list, an update with all the pre-records, and we'll be sending a list out for an evaluation on, what you'd like to see for next year. Our plans are to probably not do as many webinars, and we're also considering what's called a webinar series called storytelling. So basically, if you have an issue you want to share with us, we will organize it. And so you want to talk about your construction or your management issues or something within the community and tell us the story. We will organize it and we will let you deliver it and try to get input from other people from the communities. So we'll put more thought on how we're going to organize that, but basically, we want to turn over some of these webinars to everyone to contribute and see what is really your challenges in the community. So we will give that an opportunity.
I think the other point, John, which might be of interest too, is a day in the life of, and just fill in the blank. And certainly we have a pretty good mixed audience. It could be an administrator, and we've kind of touched a little bit on day in the life on the inspector with the building inspector panel discussions, but certainly there are a lot of other people that perhaps might like to share their experience in one of these webinar sessions for, say, half an hour, 45 minutes, or upwards to an hour.
Yep. Excellent. All right. First Nation housing and financing. Okay, why didn't that move? There we go. So what I want to focus on in this webinar, I want to look at the lending and financing on reserve, especially for housing and construction of homes. So I want to look at the governance of structures and financing, the lending and the mortgages, the initiatives for home ownership, Aboriginal financial institutions. We'll focus on construction loans. And why we want to pick this topic is there's not a lot of information out there that really tries to focus on how are the homes financed. Everybody thinks homes are free. And in fact, as we know, they're not. There is a cost, and how are these costs, financed? But as part of this webinar, I'm not sure if anyone listens to the CBC Cost of Living, but there was a excellent presentation called "No Land, No Loan: Why It Can Be Hard to Borrow Money from a Bank If You Live on Reserves." I want to play this podcast. It's not long. It's 9 minutes. And just let me scroll down here. And let's listen to this. And because this I think is a fantastic introduction.
Luann Solway grew up on the prairies, just east of Calgary. She learned from her dad and her grandfather how to raise calves, brand, run cattle.
It was like, this is just a normal life. That's how life is supposed to be. I was always supposed to be around cattle, feeding them, watering them, and fixing fences. And making sure all the babies were born.
When she started ranching on her own, she began with 10 cows, but she wanted more, so she needed a bank loan.
I kind of heard it from my late granddad's voice, then I heard it through my dad, and they would say, well, just nothing like trying, maybe things change. So I went ahead and started to knock on some doors, a few banks. I think there's like 4 banks I knocked on, and they're major banks. And they all came up with the same thing, that, sorry.
Luann is part of the Siksika First Nation. She lives on the reserve, like her father and her grandfather, and she ran into the same problems they did. Our producer Jennifer Keene is here. So Jen, what was the issue for Luann?
Well, Luann wanted to borrow around $200,000, but she didn't have anything that the banks would accept as collateral. She had her cows and they were worth something, but it wasn't enough.
And it was discouraging. Like it was, I felt like, because I grew up by non-native ranch people, and used to hear them in classroom when I was in high school and say, oh, I went to the bank, bought this many. And I couldn't see where I was different. Hell, I still pay the way they pay.
But Luann's a rancher. She has stuff. She has cattle. She has land.
She has land, but because she lives on a reserve, she doesn't own that land. Reserve land in Canada is held in trust by First Nations for the federal government. So that means they can use it for their benefit, but it is technically owned by the Crown.
And that means you can't really offer up that property as collateral. And this is something that goes back to the development of the Indian Act, doesn't it?
That's right. Section 2, Paul. Now, you can get something known as a certificate of possession if you live on reserve. Non-Indigenous people can lease land on reserves, but when you are Indigenous and you live there, you don't hold the title to your property. And this is how Mike Laborde explains it.
And so when I describe it to people, well, what does that mean? I said, you ever go into White Spot and you order a dinner, hot turkey sandwich, and you get it on a plate? Everybody knows that's Mike's plate because it's in my possession, because my hot turkey sandwich is on it. But we all know that it belongs to White Spot. And that's the same way it is on reserve.
Laborde is the former chief of the Whispering Pines Clinton Band near Kamloops. He runs the Tulo Center of Indigenous Economics.
And he also really likes White Spot.
Well, yeah. They make a really good turkey sandwich.
Well, they do. But it sounds like he's saying, hey, I want to eat that sandwich, but I also want to own the plate.
Oh, Mike would really like to own that plate. And he has been thinking about this ever since he was a kid, growing up in the 80s. His dad was a rancher. He had land on a reserve as well, and he paid for everything with cash. But when Mike was a kid, they wanted to take a road trip with the family, and his dad needed a credit card to reserve a hotel room.
And so he went to the Royal Bank at the time and applied for a credit card, even though he's owned 2 homes outright and 150 acres. They wouldn't give him a credit card because he didn't have any security and he didn't have any collateral.
Huh. So that was the 80s. What are things like now?
If you talk to Mike about this, he's a rancher himself now, he will tell you that things aren't all that different.
We've never owned new equipment. All of our equipment is used, and because we have to pay cash for it.
So he can't get a bank loan to buy new equipment.
It's really challenging if you live on reserve, not just because of property ownership laws, but because of another section of the Indian Act, Section 89, which makes it very difficult for assets on reserve to be seized by anyone off reserve.
Which is kind of a big part of what collateral is. If a loan goes bad, the lender needs to be able to come in and get the stuff.
Yeah, and when this was written into the Indian Act, it was designed to protect Indigenous property. But here's what it means today.
You need literally to have bonds, to have stocks, to have gold or something sitting in a safe that the bank feels comfortable that they can snatch up and grab if the loan goes sideways. And so this really stops development on reserves.
We're starting to get into some pretty big issues here, Jen. Really big
We're
issues.
wading in. We
Yeah.
are.
Property rights, Indigenous economic development.
They're huge issues. And we know we need to bring more economic opportunities to the hundreds of thousands of people in Canada who live on reserves. Nearly half of them live in low-income households.
So let's just talk about this issue of collateral then, as it relates to economic development. Are there ways to deal with it?
Yeah, there are ideas. Aboriginal financial institutions are one solution. AFIs, they're called. These are small agencies that give out loans to Indigenous entrepreneurs. And they don't ask for the same kind of security as a traditional bank would. Shannon Matadawabin is with the National Aboriginal Capital Corporation, which represents AFIs across Canada.
So these AFIs are able to give business loans based on sure due diligence and business case, but they also go by social understanding of who's who. They're able to work with families if they're having difficulties. There's ups and downs with any business, but they're able to utilize that and understand that they have to be kind, be flexible, and work with the entrepreneur.
What kind of loans are these Aboriginal financial institutions handing out?
Well, one of their shortcomings is that they only hand out relatively small business loans, 100,000, 200,000, but they have just launched something called the Indigenous Growth Fund, which offers bigger loans. There are calls for Indigenous people to own a stake in the resource projects that cross their territory, and there are calls for Indigenous people to own their land.
So are you talking about private property?
Yeah.
Well, this would be a huge shift. Because I actually remember this was something that came up during the Harper government. There was proposed legislation. It didn't go anywhere. But at the time, it was a pretty controversial idea.
Yeah, definitely. The Assembly of First Nations spoke out against it, saying that it would impose a colonial model on their collective lands. And, you know, there were real concerns that private property would lead to the breakup of First Nations land, that it would erode communities.
We can see where those concerns come from. If it's private property, then someone holds the title. They can sell it, and conceivably to someone who doesn't belong to a First Nation. So this is really, really heavy stuff. But at the same time, if you're someone like Mike Laborde, you also just want to be able to get a bank loan.
Right. And Mike believes that private property is the way to go. He's been pitching this idea for years. He believes that it would give people on reserves access to capital, and that...
Oh, it would change their lives, change their kids' lives, change their retirements, change everything. All of a sudden, your $200,000 home that you negotiated with the bank and paid for is something you can look forward to retiring on.
In the last, 20 years, I think a lot of Canadians have had their lives changed by this generational wealth that's being created by the housing market.
Yeah, we're in the midst of a housing boom right now. And if you live on reserve, you don't really get a piece of that. But any conversation around private property on reserves is complicated.
What about someone like Luann? She went out, she wanted a bank loan. What happened to her?
She did end up getting a loan, actually, from one of these Aboriginal financial institutions after being turned down by 4 traditional banks. But, you know, Paul, the whole experience, it made her think about what actually belongs to her.
I think that really was the biggest thing that I really had to kind of sit back and think about that and say, well, what do I own? And will I ever own? And the answer was always no.
Thanks for all that, Jen.
You're very welcome.
All right, now try to go back to my my screen. If I go forward here, 1 second. I just got the stop sharing and go back to share again. There we go. Oh, one moment. What am I sharing here? Oh, there we go. And share. There we go. Everybody still there?
We're good.
Very good. Okay. Well, I thought I'd play that short podcast because it sort of summarizes the essence of this presentation. And but you know what it emphasized and what this PowerPoint presentation or this webinar emphasizes as well is, you know, doing business on First Nations, a challenge for, you know, for everyone, for financial lenders, for people living on the reserve. And it's a very complex process. You know, there's issues related to structures, financial arrangements, land ownership. And what I want to do is just focus on some of these challenges. So I think the top ones, which were also a little bit highlighted, restrictions of the Indian Act, property rights, Aboriginal title versus free, simple, loans to members, matrimonial homes, and qualifying for loans. So as the podcast mentioned, and in this case, Section 89 prevents ownership taking place in a lot of these communities. The rationale behind Section 89 is to protect the reserved lands based on the personal property of lands and Indian bands. The problem, what happens with Section 89 is that it blocks, or is a barrier to unreserved economic development. It's a barrier for people getting mortgages. It blocks loans. It blocks any form of capital. And what happens, Section 89 also creates uncertainty to lenders, as well as it sort of highlights the risk to the creditors, where there's no security under Section 89. And this becomes a challenge for homeowner or people on reserve trying to own a home. It also becomes a challenge for lenders because they, as I mentioned in the podcast, they want security. They want something that they can grab if the loan goes in default. There is an exception, however, to Section 89, and that is if a creditor is of the Indian band or a person of Indians on the reserve is protected. It doesn't apply to personal or real property, and you can actually charge and seize that property if the land is through the Indian band. And we can see this happening through ministerial loan guarantees, we'll talk about further and how this functions. Property rights. Under the Indian Act, all lands on reserve is owned by the Crown, and it's only being held in trust by the First Nations and the bands, chiefs and councils. What happens, bands can formally allocate individual land ownership to their members, and as we heard, you can do it through CPs or certificates of occupation, or in some communities, they issue land leases, up to 99 years. Second, a band can issue permits or designate land to be leased out, and in any of these cases, it has to be approved by the Minister of Indigenous Services Canada. There also exist customary land tender systems on reserve, which has no security or enforcement in courts. And there's also what's called banshee leases. And banshee leases is where an Indian band or a band itself or a non-member enters into agreement to hold some land that is not formally approved by the Indigenous Services Canada, and it's not done in accordance with the Indian Act. So it's almost like a side deal, but they happen a lot I wouldn't say happen a lot, but they do happen. And so banshee leases can be found for industrial areas, commercial, for residential lands, and they're void because they're not legal. But what happens from a bank's perspective, they don't understand the banshee lease arrangement. So somebody says, I have a leased land for this property, but it could be on a banshee piece of property that's not necessarily legitimate. So in terms of loans and borrowing money for houses on banshee leases, it's everyone's on their own. And to have property rights on a reserve, a person must qualify as under the definition of an Indian or a band member under the Indian Act. And although these tenders regimes are not the same as fee simple, they do create interest on reserve land security and transferable. So what happens? Well, you may have a CP, you can transfer it to other band members, but you cannot, as we know, transfer them off to anybody off reserve. So there's a concept which I'm not sure if many are familiar with. We're familiar with Aboriginal title versus fee simple. So as we know, Aboriginal title is a land held pursuant to Aboriginal title that cannot be transferred, sold, or surrendered to anyone other than the Crown as a result of being eligible to a third party. Fee simple is that it's used off reserve where an individual is going to hold the land and make decisions on the land, and he owns it freely and simply, and he's the owner. So what happens? So in my case, or in Claude's case, and some probably on here as well. So we own property, and it's a free and simple that we own it. And it's ours, and I don't have to ask the mayor of Ottawa if I want to change it, or I don't have to ask, Ford or anybody what I want to do with the land. It is my piece of property. And where this distinction came in is in an important case of in First Nations and British Columbia back in 2014. And as we know, this is where the courts came out and made a clear distinction on what Aboriginal title lands mean and how it's going to be used within the Aboriginal communities. Another area in terms of loans is loans to non-members living in First Nations communities. So what happened, conventional mortgages from banks may not be available for cottages or homes located on leased land, since the land is not owned by the non-band member. Instead, a leaseholder can obtain a land lease from the First Nations, and based on that, he can maintain a mortgage. But in many cases, it has to be, cash up front or another security such as vehicles or some type of other piece of property. And we know that in many communities, there are many non-members living in First Nations, especially if they're cottage areas. Generally, non-band members cannot purchase First Nations land, but they can hold a leased land. And one of the challenges that's happening these days are many First Nations are saying, oh, if you're on the leased land, we're charging you, X amount. And then, they go back and they change that agreement and say, well, we're going to double the cost to offset. So there's some challenges with non-members living in First Nations, holding leased lands, and then trying to get loans for those properties. In the case of financial institutions, many of, they need to be aware that a lease loan or a lease on for a non-member is anywhere between 10 years, generally up to 99 years. I believe a lot of communities are now doing much shorter leases so that they can maintain control of the property. I was working with one of the communities that actually was there was a referendum on what to do with leased land in this communities. The community actually wanted to take back the land, and there was a vote within the community to say we want the non-members to leave and we want that property back. There was a referendum, and in fact, the non-members were able to keep their cottages, but it only happened by 1 or 2 votes. So this became quite contentious in this area where non-members have cottages on the shorelines. What happens when a band member defaults on a mortgage on First Nation lands? It gets really complicated to recoup the cost in terms of foreclosures. And basically, the Minister of Indigenous Services Canada generally has to get involved to approve the new purchaser of that non-band member's home in a First Nations community. So suffice to say, it's a very complex situation. Construction loans on reserve. I also want to focus on this area because this is also a bit of an area that we don't really talk about that much. So, in this situation, a band member who has a certificate of possession or at least wants to build their own home, and you make a application for a construction loan or a draw mortgage. So a draw mortgage is similar to what we should know, progress payments. You're building a home, and on these 6 stages, you get so much draw to pay for the materials as you're moving forward. Construction draws is the name of the process where the financial lenders basically finances a band members that's used to pay for the contractors. And as I mentioned, it's progress payments. The lending institution provides these funds based on on-site inspections. These inspections are conducted to record the project's progress and either provide recommendation for further funds or review any irregularities or deficiencies in a project plan. So again, you have an inspector going in, looking at progress payments, but at the same time, looking at code deficiencies. Depending on the licensing institution or lending institution, there may be verifications of building permits, zoning, licenses, insurance, bonding of the project builder. In our previous webinars, we've talked about all these areas, right? So, a building permit. In many cases, lending institutions may start to ask, well, if you're building in a community, where's your building permits? Show us that it's zoned in there properly. Show us that you have the proper insurance. Show us that the contractor that you hired is bonded for that particular project. So in this case, the onus is on the home builder, but again, the responsibility of the chief and council rests in terms of permits, zoning, and licenses. So, and if they're not in play for many communities, it may be a challenge for banks to loan you the money because it's just, it's not making them comfortable. Well, the council is the authority having jurisdiction to ensure that it's being built to the National Building Code and standards. In most First Nations, as we talked about, there's no zoning, there's no planning boards, there's very few building permits, and as we know, again, are these plans being signed off by professional engineers or architects? In this particular case, these are homes being built by council. If individuals such as you or I, if we're members, move back, we're probably more conscientious that we're going to hire and have plans signed off by engineers and architects. I just had a discussion over the weekend with a few inspectors that told me they've been inspecting new homes that the banks lend. This individual had money and paid for the house, and he was called in to ensure code compliance on deficiencies. And when he asked the homeowner to look at the plans that were signed off, this homeowner did not have signed off plans and did not have any inspections, although the contract said an engineer would provide several inspections. That never happened. And so this person has invested, I was told, $450,000 into a home, and the home's not built to code and has many severe deficiencies. So in many First Nations, it's unclear as to whether the National Building Code or provincial codes apply. Again, we talk about this authority having jurisdiction, the importance of having band bylaws to say, are we building to national, or are we building to provincial codes? And again, we also talk about councils not passing any up-to-date bylaws to specify these points. And again, making it a challenge for people to receive money on homes if the structure or the framework doesn't exist. It becomes more of a problem to try to even get any type of loan when that structure is not there, especially on construction loans. The other problem that we're talking a little bit here is on matrimonial real property. So matrimonial real property is, another word for family homes. So off reserve, if somebody's going through a divorce, the division of matrimonial real property is governed by laws within the province and the territories. But when they replied to First Nations, this wasn't the case until there was a Supreme Court decision in Dickerson and ruled that because reserve land falls under federal jurisdiction, certain provincial and territorial laws could not be applied to matrimonial or real property land on reserves. So back in 2013, the federal government introduced a Family Homes on Reserve and Matrimonial Interest or Rights Act. And this was created to address matrimonial real property and provide a set of provisional federal rules to be used until a First Nations community can establish their own laws. And as of 2022, February 2022, there's been 17 First Nations that have actually established their own laws under the FHRMIRA. And another 40 First Nations have enacted their own matrimonial real property laws under their own land code. So these were ones that have comprehensive agreements, and they move forward to establish, some type of, matrimonial real property guidelines. So basically, the FHRMIA applies to married couples or common law partners living on reserve, where at least one partner is a First Nation member or a status Indian. The Indian Act defines common law relationships as two people in a conjugal relationship who have been living together for a year or more. First Nations with self-government agreements covering land managements are not included within the scope of the FHRMIRA, as the self-government agreement already determines the matrimonial property matters are governed by how they're governed by the provinces or the territory. So they take what's governed off reserve and many adopt for on reserve. The exception that self-government First Nations with reserve lands may ask ISK to make a declaration that the provisional rules apply to them. So if they can't get agreement, they reach out to the minister to satisfy those requirements. When a First Nation has not enacted its own matrimonial real property, the federal government has established provisional rules. And these provisional rules are generally based on remedies that are based on provincial or Superior Court decisions. So they're trying to take what happened governed off reserve, they're trying to make it apply on reserve. So for example, under the rules, they would say that a spouse and common law partners have equal right to occupy a family home during the relationship. Another rule would be the family home cannot be sold, transferred, or mortgaged during the marriage or common law relationship without the free and informed consent of the other spouse or common law partner, regardless of whether that spouse or common law partner is a First Nation member. And another one, for example, a spouse or common law partner can be awarded exclusive occupation of the family home on an urgent basis in case of family violence. So that's, I think, a really important one. And what's also interesting they also have similar in terms of the event of death. And so what happened, the survivor has the automatic right to occupy the family home for 180 days after the death of their spouse or common law, regardless of whether they are not have any interest or rights in that home. And I know that becomes very contentious for many of the communities because they may have a home and that has 3 bedrooms and they want to, remove that person into a smaller home. And so there are rules around what you can and cannot do under the guidelines established by the federal government. I know of all the years I've been involved in housing, we don't get a lot of discussion on matrimonial real property, but I do know housing managers are always dealing with this piece of legislation and the guidelines around it. So I thought I'd mention too, because from a financing point of view, it becomes a challenge when the home is being split or when one of these rules are being applied. So I wanted to raise it as part of the discussion of what happens in those situations. So one of the big challenges is qualifying for a loan. So we heard on the CBC podcast of that one of the problems with First Nations is they're really excluded from the consumer credit rating system. So credit rating is the integral part of lending and banking economy. So for example, you can see on TV, advertising, people say, check your credit scores. And all what that leads to is, if you have a really good credit rating, you're able to get more money from the bank, etc. And which I've, even found out recently that if you apply for a loan, that actually, and if you don't, so in my case, I was considering applying for a loan for a vehicle, and they said just by making the application, it will impede your credit rating. And I said, how is that? And he said, well, because you're applying for credit, because if you didn't, you would have the cash. So even just by making an application, it will have a couple ticks on your not so good of a credit rating, which I find strange how that all works. So unlike off reserves, it's difficult for First Nations to establish good credit because, as we know, they don't have access or they don't have ownership to the lands or to the properties. So for many First Nations, to buy a vehicle, you have to pay cash, right? And unless you get private loans, then you're able to get it that way. But very few financial institutions will provide that. One of the big challenges as well is financial literacy is I think a bigger issue for First Nations. I know in our community consultations and talk about rent, one of the issues that we had to face with by comments by some of the elders was they don't mind paying rent, but they were unsure of how to do budgeting and how do you budget for rent. So we had that discussion, I believe, with Benita Schneider from First Nation University in Regina, talking about the importance of financial literacy.
John, could I
Yep.
just make a comment here?
Yeah, go ahead.
Jessica had just indicated in the chat, rent-to-own units get dicey when the tenant dies without a will or the surviving spouse is non-First Nation, but they have First Nation children.
Wow.
Jessica, did you want to follow up on that for a moment?
Yeah, Jessica, give us more insight. But fascinating.
I think.
Oh, have to unmute her.
Okay, let's see if we can do an unmute here.
I got unmute.
Got her.
Oh,
Hi. We have a draft policy for the rent to owns, but we don't have one that has passed. So it's such a gray area. We've had maybe 4 tenants pass with no will, but number one, it's difficult to will something that's not yours, right? Because it's still technically the band's. And then another example is my brother. He has 5 kids, and his kids got status, but his wife doesn't. So if something happens to him, will his wife have to move out with the kids? But what he did was he willed it to my son. So my son would take it over till the kids get old enough to be able to do it, take it over themselves.
yeah, that's really fascinating. Like, so has your community thought about adopting the matrimonial legislation for First Nations, or is your policy based on that? I'm curious, what's the policy being based on?
But we have a land code. We're by land code.
Oh, okay.
It does have part of the matrimonial. But again, it's difficult to do because you don't own it yet, So it's been a difficult couple years, that's for sure.
Yes. And then the wills even more difficult because as we unfortunately knows, if you don't have a will, it's complex. And if you have a will, it's also complex because then it's really governed by Indigenous Services Canada on the execution because they're the executor, I believe, in many cases, correct? Yeah.
Yeah, until they have somebody like for example, this more complicated, this guy named Buddy, he had a unit. He didn't have any kids, but for some reason he got a rent to own unit. And he ended up in the hospital for, I don't know, for a while because he had epilepsy and it was really bad. So he had a cousin or nephew that wanted to buy out the unit so that he can have it. And it was all good. Because I went up to talk to Buddy in the hospital, and he said, "Yeah, he'll transfer it to Scott." So we came back to the office. I made the notes, and then I was going to act on it, and he died the next day.
Oh.
Yeah, and another thing is to make that even more complicated. There was somebody that was living in the unit that wasn't a tenant, not really. He was his second cousin or something, and he didn't want to leave.
Wow.
Yeah, so Buddy's brother finally, after 2 years, became the executor, and Scott has now moved in, but now we're in the process of getting the payout amount.
Right.
Which is difficult in that too.
Yes, yeah. So, when I looked at the numbers of the number of communities that actually have matrimonial home, there's not a lot. I know there's been discussions of promoting and pushing this thing further. And I wonder if the First Nation Housing Professionals Association will get more involved on the matrimonial real property, because I know, like I said, there's only 17 of it's approximately 640, and 40 have a land code, so it's not a lot of governance in that situation. So, yeah.
Thanks, John.
Yeah. Unreserved loans. So we know that CMHC provides unreserved loans. And again, their criteria is you have to have a CP or be granted land, use of the land by the First Nations. You have to meet the approved lender's minimum requirements, including being able to repay the loan. And in other cases, there's other requirements, type of building that you're buying or you're building, And again, then they break that down further. If you're a home buyer, you must have savings or INAC contribution equal to at least 5% of the loan value. So if you're building a 90,000, you need to have a down payment of 450. And then if you're investing in more units or less, you have to have 20%. And again, for 5 or more, you have to have 50% or 85% of the value. So again, similar to loans off reserve for first-time buyers, not as strict, but the same. They have set up some type of on reserve loans. Okay, can I move? And so, as we know, CMHC has been, again, providing on-reserve loans. But the big one, I want to point out, the last one here is for rental projects of 5 or more, the minimum down payment is 15 of the loan's value. And CMHC ensures loans are values for qualified rental projects up to a maximum of 85 of the loan value. Claude, these are similar to off-reserve loan requirements, aren't they? Do you know?
Similar, I believe the current rate is 20% though.
Yeah. For off-reserve, yeah.
For off-reserve.
Yeah. CMHC also provides loan insurance to approved lenders, and they allow. So what happens? They provide it to housing, First Nation housing projects, and it can be approved through the bank, credit unions, or the Aboriginal capital corporations. An approved lender will work with community or individuals for the loan applications. The big one again, all loans are secured by council resolution and administer loan guarantees from Indigenous Services Canada. And if you cannot repay the loan, the outstanding balance will be paid by the approved lenders by INAC on your behalf, or they require the payment from First Nations. So that gets us into the, I'll pass that one. So that gets us into the ministerial loan guarantees. So why were they created? There's basically, it's a workaround to Section 89(1), right? To secure a loan for First Nations for the purpose of construction or renovating the home. The ministerial loan guarantee is guaranteed by the minister that if there's any loss, the Crown will pick up those costs. And again, the eligibility criteria is the site has to be eligible for a loan, have to provide audited statements of consolidated funds accepted, is the community is well managed and meeting all financial obligations. According to Indigenous Services Canada, they point out that it's a low exposure for the government of Canada. So in other words, the defaults are very low, and approximately 0.6% of ministerial loan guarantees are not paid, and that's compared to the national average of off-reserve loan defaults of 0.5. So it's pretty similar in terms of risk, and as we know through property, through housing managers, ministerial loan guarantees, the community has to try to make a payment, and there's pressure because they can actually, because they're the loaner, and under Section 89, there's an exception, they can actually repossess those properties. And if that's not the case, then the Canadian government provides any loss. And that process is done through a parliamentary procedures. First Nations housing loan, market loan. Again, for many of us, we're familiar with this, but it's an opportunity that they provide funds to a broad range of options for residents and First Nations so they can build their own homes. And what's great about this is they're also helping to, make investments for home ownerships within First Nations. Again, in order to qualify, you have to go through a criteria for that you qualify for the loans, and it has to be approved by a financial institution. And so what happens, as we know the process, you make an application through the Housing Trust Fund. If it's approved, then they say you go to this bank and you can borrow. So they underwrite that loan. And we have here only 81 of the communities participate under the Housing Trust Fund. And those who are not participating in Housing Trust Fund can still seek loans from financial institutions. So basically, if a community doesn't have financial audit systems in place and need the security, they can go to the Housing Trust Fund, but you don't have to do that. You can still go and get seek funds without the Housing Trust Fund and get loans on your own. The big one, which probably, I don't know how many people are aware of the Aboriginal financial institutions. So there's a growing number of Aboriginal financial institutions that promise to increase First Nations access to loans and capitals. They provide development lending, and they provide services to Métis Inuit communities in all provinces and territories. As the CBC podcast indicated, they're more flexible in working with First Nations in terms of providing loans under their arrangements. And I believe right now there are there's 58 AFIs. And so, for example, the Alberta Indian Investment Corporation, there's the Apikawan Métis Development Inc., there's the Indian Business Corporation, there's the Settlement Investment Corporation. So there's a number of AFIs. Also, they take on more risk than conventional loans, but they're only losing on an average of 2.1% of all their loans given out. So while they take a higher risk, they're not losing all that much in terms of their capital. So they continue to be very confident in providing loans to First Nations, understanding the risk and understanding the limitations of Section 89. So those are the main areas of financing. For some, it'll probably be recap. For others, understanding how off-reserve lending works. So I try to make that comparison. And most importantly is, from a housing management perspective, knowing the dynamics, especially if you have non-members and banshee leases and all these different types of arrangements, because they generally will fall on your desk to manage. So, which is not easy. So if there's any questions or.
Yeah, thank you, John. I've got one post here in the chat from Jessica. BMO, Bank of Montreal, I would assume, has a good on-reserve loan program. First, so First Nation can only guarantee up to $350,000. What kind of house can you build today, especially with the price of materials? So I think it's a very interesting post because we've been talking about the financial side and the money side, but certainly, as we well know, the prices of houses, certainly off reserve, have gone up dramatically. But certainly, even for on reserve and certain First Nation communities in general, just to buy a sheet of plywood or a 2x4 anymore has gone up dramatically. So the price of materials are almost making housing almost unaffordable.
So in Jessica's example, and it's really a challenge. So if you get a maximum of $350, what happens is you end up borrowing money from family members to offset those costs, which becomes a bigger challenge because the importance is make sure that if you're building a house at 350, you don't want to be building a disposable house, right? You want to make sure it's built to code, it's built strong, and it's going to last in terms of time. So, and again, the importance of construction practices. So if you're borrowing from a family member, you want to make sure your home's going to last more than the 7, 8, or 9 years. You want at least a good 25, 30 years.
Yeah, good point. Very good point. I often refer to those, we'll call it additional costs above and beyond what is affordable to most families as going to the bank of mom and dad.
Yeah. And one of the challenges too on financing, which I know is a big problem, is if somebody's borrowing a house for 350, it's usually, what's an overrun on a house now, Claude? Is it 10, 15%?
And sometimes higher, yes.
Yeah. So if you're borrowing money at 350 to build, well, you can all of a sudden just add another 10, 50% on top of that. And probably even a bit more if you're hiring a project manager, which you should hire because you want to make sure it's built properly. So I think a lot of First Nations get caught off guard saying, I'm going to build this house for 350. And you would say, what if and what if? So, and on the final point, Claude and I were having a conversation based on our other webinar on infrastructure on the cost of off-reserve permit systems. So go ahead, Claude, just give your cost of what you're looking at for your son to build a house.
Yeah, my son was looking at building a house about 3 years ago, and unfortunately, costs were starting to fluctuate dramatically. But getting back to John's comment about a building permit, so I live in we both live in the area known as Lakeshore, just outside of the city of Windsor. The average cost of the building permit for a house he wanted to build, that would have been, let's say, roughly in the $500,000 range, was going to be slightly over $20,000. Now, mind you, when you factor that in, it's like, wow, that seems like a lot of money for just building inspections. But really what we have to consider is when we talk about permits in general, certainly what a lot of municipalities do, certainly off reserve, is, well, what about the park levy, the drainage, the water maintenance, because they want to put in a new water tower because of, we'll call it water pressure issues. So again, all these built-in factors that build up to a permit to build anymore, in his particular case, was going to be, like I say, well over $20,000. So you begin to question, wow, that's a lot of money just for a permit.
But it offsets all the cost for the community to build that house and to service that house. So that's what you're paying for.
Exactly, John.
Yeah. So, okay. Well, anyone, thank you, everyone. This ends our last live one. On the 5th, we'll send out the webinar, our pre-recorded one, and then we'll send out some type of evaluation to everyone, get some feedback on, the good, the bad, the ugly, other ideas, and we're some ideas what we're thinking about as well. So, all right. Thank you, everyone. Stay safe and be healthy.